welcome to the closing beat, everybody. Happy, well, today is Tuesday. Yeah, I tell you, this is always 1 second away from not happening. This show is like last second every day. But hey, we're here, and I appreciate you joining us. Welcome to the closing beat. Quick stock market update show that we do. We're going to cover the stock market, all the good, the bad, and the ugly today. And we're going for a win today. So basically, just want to make sure all this goes well, all in one shot. So I'm just going to try to talk, go through everything I've got to share with you, and we'll be out of our way. If you look at the screen on the right-hand side of your page there, we've got the market indices there. You can see the NASDAQ led the way again. It's just been leading the way. Stock market was higher today, basically all because of, excuse me, all because of the FANG names, FANG plus names, and everything like that. And then second, third, fourth, and so on is basically everybody else. NASDAQ just left everybody else in the dust, said, you guys, take what you can get, but that's it. So you've got in the Dow, well, let's just go over here and make this happen for you guys, huh? Can we do that? Yeah, worked. Okay. Here's the NASDAQ hitting new record highs and closing at new record highs here today. If you look at the Dow, it basically held in there. You got Nike. Nike was kind of interesting today. Needham raised their price target. So if you're looking in the Dow, Nike was one of the better performers there, if not the best. 2.5% gain on the day. They went from $80. Their price target was all the way down here, all the way up to $113. So that's what you had there. But let's take a look. Look, you got the stock market here. Rather interesting what happened overnight. I just happen to always be watching, and I love kind of paying attention to this stuff. If I go to a minute chart here, let's just say a 5-minute chart. Look over here. This is last night. It's kind of interesting. The market's just plugging along, and all of a sudden, whack, 15 minutes loses 1%. 1% of your account fell in 15 minutes. However, it recovered basically in 15 minutes all the way back and then continued higher. Well, what happened? Well, their trade advisor, Peter Navarro, if you're familiar with Peter Navarro, he said that the trade deal right here said trade deal was over. His words, not mine, over, right? Then markets start falling, and he goes, wait, whoa. People took me out of context. The president tweets that the trade deal's not over. Everything's fine. You misunderstood the word over. And the stock market starts it goes back to highs here. Holy cow, man. Bottom line is, we looked at this to see how impactful are the moves that this guy, when he comments, how impactful are the moves, basically. So far this year, Peter Navarro has made comments to Bloomberg, whether in text, TV interview, or radio, their podcast thing there. 88 times Peter Navarro has been featured somehow on Bloomberg making comments about trade, the markets, the economy, etc. The performance, the day of his comments, was an average is 3.15%. So in other words, if he were to say something today, average performance for the stock market is 3.15%. Don't look at that. The day after he makes a comment or is featured in something Bloomberg related, the stock market actually averages a 1.05% loss. Right? That's 88 times this year he's talked. In other words, there's no consistency there, right? He could say whatever he wants. Clearly, things like this happen. If you go all the way back to when he was first appointed, I'm going to stick with this for just a second. When he was first appointed, right after the election, you have a total of 1,467 times that he has been on some sort of Bloomberg media making comments about all of this. The average change the next day in the S&P 500 is 0.2%. That is it. So what's the moral of the story here? Last night was exciting. That was awesome to watch. However, you can't make a living based on what his comments are or could possibly be going forward. So no real reason to deal with anything there. Anyway, so aside from that, you've got the virus talk, right? Well, here's the S&P. Did I cover the Russell? Go to the Russell real quick. A little bit weak there, still stuck under the 200-day. You got the virus talk out there. I thought maybe I'd bring you virus data on a daily basis if that's something that you're interested in. I don't have anything fancy to share with you this time, but right now we have 34 of 50 states reporting higher cases than just a week ago. So that's almost, that's obviously more than half. 11 states now at 100 cases per million per day. Doesn't sound like a lot, but that's where it's at, right? Basically, for now, the market is seeing things like that, and they're basically saying, I guess the fact that the death counts are declining, hospitalizations are increasing but are still near lows there, is based from a national average standpoint, by the way, is basically okay. You look at Texas, that's considered a hot spot, but if you look at their death counts are down 8 per day to a total of 30. So Texas has averaged 30 deaths per day. That's known as a hotspot. That's also the highest, the quickest decline overall. In the USA, we currently have 1.76 deaths per day per million in the population. So right now, the stock market, I think, is looking at that and just saying, that's not that bad. Nobody wants to die from anything, of course, but that's where we're at in terms of the data. Every week I put this in our newsletter, by the way, for our customers to kind of show the stats from a non-biased standpoint. Notice I don't have an opinion about that. You take with it what you want, but that's where we currently stand. In our FinTips video yesterday, we talked about REITs. I'm sorry, I'll go back to this real quick. All right, we talked about which REIT ETFs to choose based on volatility, how to search for them, what it all means. Tomorrow, we're doing when to sell a stock, in particular, based on your statistics, based on your performance, and not necessarily buy here, sell here. And then Friday, we're going to expand on that, explaining how you determine risk and calculate all that stuff. Really kind of a cool one there. In our Wine and Wealth class, we're going to have a serious discussion this week about your taxes in your retirement, because all that's about to change and currently is changing. Anyways, let's go over to the good stuff here. That's just some data I wanted to share with you. Let me know what you think. Is that a waste of time? Should we just move on to something else? We'll go to our sector breakdown here and take a look. I'm just happy everything's working at the moment. Tech, one of your leading sectors today. It kind of duked it out with the consumer discretionary sector, or the XLY, in terms of the best gainers. But overall, tech, I believe, nope, still didn't finish. It did lose its first place spot there. Anyways, it was mostly higher today due to Apple. It was upgraded at UBS to $400. Of course, they've got their developer conference going on right now. All's looking good there. I want to point out Visa. Visa had a good day, 1.5% gain there. Visa got an upgrade to $202. It basically puts it back at these highs here, if you're following along, but all otherwise, it looks pretty good there. Thought that was cool. And one thing, yesterday I mentioned the Apple Developer Conference, how Apple was bucking its historical trend. I didn't get a chance to share that information with you. I like to share visual data with you when I can. I didn't get a chance to throw that out there. So here's what I wanted to show, how typically Apple ramps up into the developer conference, sells off during the conference, and then gets back going again. My hand doesn't really do that justice. So we're going to go over to this real quick. Typically known as the curse of the conference there, historically when Apple gets to the Worldwide Developer Conference, the average move is to the downside there. This goes back to 1989. We are currently right here. We are in the middle of the Worldwide Developer Conference that they have going on. They announce new products, things like that. Used to be a surprise. We used to just get hit with this like awesome thing, and Steve Jobs would be like, bam, look, it does all this cool stuff. We pretty much know everything these days before the conference. For that reason, you can see the black here, we've got the average performance over all of the years, going back to 1989. 3 months out, pretty good. 1 month out, we start that pressure. 1 week beforehand, it's just very positive there. During, it averages actually a loss, which is this entire week, by the way. The week after, still a little bit of a loss there, and starts to recover as you get going. Just for fun, I put any year or averaged out all of the years that have the iPhones, new iPhone launches in them. You see a little bit better performance ahead of time. People, I guess, getting excited. Still weak during the developer conference, but then much stronger compared to all other years going forward whenever there's an iPhone. So the lesson there is, if we ever find out there's going to be a new iPhone launch at one of these future ones that they have for whatever reason, then you know performance is just better going forward. I want to take it a step further, though. We'll go to percentages. Percentages of being positive, not profitable, positive. Same thing, 3 months, 1 month, 1 week, and during, and then we go 1 week out, 1 month out, 3 months out. So you can see the odds of Apple being positive in any 3 month, or the 3 month stretch before 1 month and so on, actually pretty good. I mean, it's better than average, it's better than the stock market, it's better than the NASDAQ. It's actually pretty good if you take just a random 3 month period at the same time. During the developer conference, not very good. Put it in red there just so you can see that's the lowest one. Right? That one doesn't do as well. And you now know why. Typically sell off during that. And then going after the conference there, of course, it gets back to normal, gets back to being better. Well, this time Apple's actually bucking that trend, right? We're not down. Apple's actually positive at the moment. If we were to take a look over here, Apple's at new highs. Yesterday, when they made the initial announcement, stock shot higher. So it's kind of interesting to see that little change of pace there. Anyways, that's what's going on in the tech sector. Just wanted to share that with you there. Let's go over to some of the other areas of the stock market and or sectors of the stock market and take a look. Well, start with an industry here. Semiconductors back at the highs here. Semiconductors are hinting at wanting to break to new highs. You have some interesting names inside of there. I found on semiconductor, I think it used to be ONNN was the symbol. Over the 200-day moving average, looking better. All is good for those. I think you have names like Maxim starting to perk up a little bit today. A lot of overhead resistance, but looking pretty good there. If it's something you want to research, right? If it's just something you want to dig into. Xilinx, an underperformer, but starting to wake up now, back above the 200-day and really holding its own up in there. So I thought that was interesting. If we go over to communications services, they're sitting up there near the highs today. That would be a little bit because of Facebook, 1.26% gain on the day. They got a VR developer to join Oculus, which they've been working on real hard there. I don't know what the progress is, but that's where that stands. And I thought T-Mobile had an interesting day today. Big gap down. The news was that SoftBank was going to be selling part of their stake, if not their whole stake, in the company. The stock sold off or gapped lower to start the day, and then boom, just popped to highs there. No big deal. It did close right in the middle there. So is that bullish or bearish? Ask yourself that. If you own the stock, was today bullish because it recovered all of the gap down, or was it bearish because it finished halfway off of the highs of the day? In other words, with just a small gain. I wonder what's the answer to that question. Healthcare starting to try to fight its way. Interesting volume today. If you look throughout the day and you take a look at different points before lunch and just after lunch, healthcare tried to push past this 50% mark. The volume is getting a little bit low. There's a little bit of a lack of interest there, but they'll be back. If that pops up above highs, you've got something interesting there over the recent highs, last 4-day high. United Healthcare up today. That was your biggest contributor to healthcare today. If it weren't for that, healthcare would likely have been down more. Home builders, want to point that out. You got home builders higher by 1.15% on the day, right over the 200-day moving average. Looking good there. New home sales better than expected, much better than expected actually today. So you had some names like Mohawk, really strong move. That was your biggest gainer in the area there. Whirlpool had a good day as well, 1.3%, but there's a lot going on there. So we'll move on from that. Gold, a little bit higher on the day, $15.60, or $15.60, up to $17.82. That's almost an 8-year high. Do you know that? We finally broke out. Been talking about this for weeks, how this gold's been looking strong but quiet. Basing sideways, tightening up. All of a sudden, people are interested in gold there. That's going to be just about an 8-year high. However, this is not just a technical pattern. What you see, and we've been talking about, is a technical pattern that we use as one form of, I don't know, a way to generate an idea and say, well, I think that looks strong. That looks quiet and basing. Let's take it a step further, though, and we've already done this, so I'll just reference back to what we talked about before. Was it over here? Yeah. If you go back to June 4th on the closing beat here, we talked about this really interesting move in gold, how the commodity was moving sideways. That's the purple line there on your chart. But the number of dollars flowing into the GLD in this case was actually screaming higher and just getting stronger and stronger. Added over $10 billion or $7 billion while the commodity was going sideways. Why would people buy more of something that's not currently moving? Why? What's the reason, right? So what we did is we went back now and looked at the most current point. Let's see if we can find this here. Right here? Yeah, there we go. So here's where we stand currently. Now gold's starting to wake up again. Look at how much money is flowing into gold. So this is just an overlay of the number of dollars flowing into the GLD versus the actual GLD, just so you can see the price movement there. Tons of money flowing into gold. So we brought it back up on the 4th there, talking about just kind of how all that works. You got a chance to see that. And now you've got this little breakout happening in gold. I don't know what happens from here. You like to recognize things. So don't just look at a chart and say, I think it's going to go higher. Right? I mean, there's a chance, but what is that? Look further and see if you can see something else that stands out. And in that case, what we've been talking about there was money. Money flowing into that. Looking pretty good. If you go over to silver, by the way, it's kind of funny. Gold, if you were to take gold and silver and plot their performance over the last year, gold would get the gold medal and be in first place. Silver would get the silver medal and be in second place. Still a good commodity, though, today. Oh, thank you. Thank you for that. I appreciate that. I've been thinking about that one. 1.5% higher on the day. Looking good. The dollar, by the way, continues to be the reason there. Nope, that's not the ticker. There it is. So the dollar sold off again. Although off its lows for the day, the dollar sold off again yesterday. That helped gold get going a little bit. So there you go. One other thing, that GDX we've been talking about here, breaking out of this little downtrend. GDX looking good. And I said yesterday, Newmont doesn't look like the darling anymore. It actually looks like Anglo Ashanti. Anglo Gold Ashanti. I'm going to just finally say it right. I always say Angloed. Anyways, hit new highs there. So if you're taking a look at these two stocks, I was trying to hint at that, try to show you, not that you'd buy it or do anything with it, but just recognizing where money's moving at the moment. It used to be Newmont. I mean, for weeks and weeks, it was Newmont, but that's where we stand there. All right, I feel like we're getting a little long here. Let's go over to the technical breakdown. We'll just breeze through that real quick. In the technical breakdown here today, you had 24 new highs. That's new. That's a bit of above average for the last couple weeks. You got 4 FANG names, 2 gamers, 4 techs, 2 financial companies. You got our breakout play, Whole Logic, and 2 stocks with 50% gains or more year to date. That's basically that in a nutshell there. EA and Activision, EA and Activision. I do want to keep pointing that one out. These are exciting. They've hit new highs, but see how they keep running out of steam. They get up there and they just can't get anything done. They're just extended. They're not bad stocks. They're just extended. EA more than Activision. And today was the same thing for both of them. People want to participate. They're just not making anything happen. Whole Logic, this is our breakout play. Officially clear above the skies there. Volume's good. Volume's strong and everything. Overall, it was just a sector that wasn't that interesting today, so there wasn't a lot of extra money. Still gained 0.5%. Not too bad there. There were no 52-week lows on the day. And yeah, that's basically all I got for you there. We'll go over to some stocks in the news real quick and take your questions if we can. Hertz down 11% today. Morgan Stanley said it's going to zero and they feel bad for all the people that bought the stock. Shouldn't have bought the stock. They said that they have a bull case scenario, bear case scenario, and it looks like the bear case scenario is the one that's going to play out, which is the stock goes to zero. Their words. Not mine. Cheesecake Factory is issuing 12 million shares. Don't know if you own or care about that. One Oak is doing a mixed shelf offering. I believe this is their second of the year. But they're doing one of those mixed shelf offerings, which is, we've explained this in the past, just where they take a group of either debt or equity that they want to issue. They don't know how much. They put it on the shelf. They register with the SEC so that they can pull it out and sell it whenever they want. It's been popular these days. Albertsons, nothing's going to actually come up for this chart just yet. Albertsons priced 65.8 million shares at a range of 18 to 20. If you're familiar with Albertsons, they're going public. And it's the second largest grocery chain out there. We'll see how they do. Maybe they could be the largest. Luckin Coffee down 12% today. The news gets worse for them. They're being delisted from the NASDAQ unless they can file their annual report. And Luckin Coffee said, we'll get on that. We'll do it as fast as we can. But no word back from Luckin Coffee in those terms. And we've got one earnings play I want you to check out. I just want you to know about it. I'm not telling you what to do with it. Of course, I'm not allowed to do that. Winnebago. These guys sell RVs. You think the stock is higher or lower tomorrow if we had to play like a game show thing here? Higher or lower for a Wednesday? All right, they're reporting their Q2 earnings tomorrow. That's what's going on for them. If you look at the performance of Winnebago, it tends to do the same as Kroger, right? A little bit different. Remember, if you've been around, we talk about Kroger when it gaps up. It does the opposite, sorry. When Kroger gaps up, it tends to fade away. In Winnebago's case, when it gaps higher, it tends to continue higher. So I wanted to point that one out just because it's kind of a carry forward from that lesson that we did 2 weeks ago. There are only 5 times in the last 20 years where the second quarter earnings, the stock finished lower than where it started, right? So in other words, if it gaps higher by, let's say, 1%, that means that it finishes higher by some other amount. So if it gaps higher by 9%, you finish the day higher by 11 or whatever it is. You can go back and look at all of them there if you want to take a look there. Can I go to it? June 20th, 2018 is what I'm trying to pull up. And nah, I won't be able to show it on a daily chart. But you get what I'm saying there, right? So if the stock starts higher, the odds are that it's going to finish higher. So it's one of those where there's a little meat on the bone for the rest of the day. Day traders like that. I just point that out because those guys like that. I'm curious because it's already higher. The stock is already sitting there looking pretty. If it starts higher, wouldn't you attract some of those people that already own the shares to sell? I don't know. That's my thing. All right, I'm going to take your questions from here. I've talked enough. Let's see what we can do. I will zoom this guy in, see what you got. I realize there's a little bit of delay. I forgot that yesterday, and I just left you guys hanging. I'm sorry. Just left you there. You think analysts underestimate the effect of the amount of new retail investors or traders? Nope. They actually know the exact amount. They study the dollars going in, the new accounts, because Schwab, TD Ameritrade, Schwab and well, they're all owned now. They're being bought out. But all the companies that are public, they actually report the number of new accounts, their assets and balances. And then Robinhood, for some reason, either just doesn't know that they're sharing all this data, but everybody knows everything about the dollars that Robinhood has and where you guys are putting your money and everything. So they actually add that all up. There are analysts that do quantify that and break it down to why is everybody buying Hertz? Well, actually, the average account balance is $4,220 of the person buying Hertz or whatever it is. I don't have the stat on that. But that's That's actually being tracked. Yep. Thoughts on Apple dropping Intel? They must be awfully confident in their new chips there. I remember they had some acquisitions last year, so that's what's going on there. But you wouldn't do that. They wouldn't do that if they weren't confident there. That is interesting. Can we extend the guess the Dow till Saturday evening? West Coast follower. Well, you could take your guess really any time. We'll probably pick that back up. I know there's guesses for this week, so we'll make the announcement on Friday. But yeah, you could guess now. I mean, just take a shot. So no need to worry about, I mean, you could guess Friday night before you go to bed. No big deal. Yep, Nike reports earnings on Thursday, of course. And I don't know. I think their digital efforts has gone really well. I know that's not brand new news to you guys or anything, but their ability to sell more online rather than inline has gone really well and continues to get better. That'll be the focus if you're wondering what everybody's going to look at on Thursday. Do you think BP keeps their dividend? I don't think there's any issue with them not at the moment. I haven't seen anything launch that says, I mean, you have analysts that think, you know, this or that, but nothing from the company. And as I look just over the last couple of days, I'll make sure. No, yeah, they expect oil prices to stay low. They're positioning for that. They've written down $17 billion already with no talks of cutting their dividends, at least in the last couple of days. So, yeah, that's it. Time for the Qs to pull back. You can't blame it if it did want to pull back. NASDAQ's had a good run. Today was interesting how it had a good run, made new highs, and all of a sudden started fading. Right? When you see something like that, that tends to mean profit taking, not stress, not panic, anything else, just profit taking. So you'd expect that. Yeah. I can't blame you. Why'd the market fade in the last 2 hours? Just a little selling in the last 2 hours. It was across the board too, by the way. Every single sector across the board. The only one I thought held up nicely was healthcare. Healthcare kind of held its own in like the last 25 minutes or so while everything else sold off. Yeah. I didn't mention Boeing. What'd you like to know about it? Didn't do anything today. Yeah, I mean, it's still beaten up, I'll give you that. Spirit Aerosystems, by the way, got the note from Boeing. They said to cut production of their 737 parts from 125 down to 72. So maybe reason for a little pressure there. I don't know if that's new news or old news there, but we'll see. Thoughts of the flight of the upper middle class leaving those places like New York and stuff, and yeah, I don't track it. Yeah, be honest with you, I haven't seen real news. The first time I saw real mainstream news was on Sunday. We went out to eat, and I can't take it. Yeah, I don't watch that stuff. Sorry, I'd rather read, study, see what's going on, check data. I want to make my own opinion. I don't want to be told. And plus, we cut the cord. Ever since we moved, we cut the cord. I'm watching puppies all night. How do you feel about energy services, Schlumberger, Halliburton? Yeah, we talked about Schlumberger, ExxonMobil in particular, those two working together, how the differences between them all and everything. I think energy and oil could take a break. It'd be totally fair. Very hard commodity or sector to try to counter trend, pick the top or the bottom. But all of these stocks, including not just your service companies, your transportation companies that are in the oil space, they're all in chop land, right? So they've all had a good run. They pulled back into a big choppy mess. So it's really hard to say, I would like to commit new dollars to this area right now. So that's a tough one. You're welcome, Christian. I actually don't look at the names when I read. That's a bad habit, but there's a light that shines, I don't know where it's at, but it shines right here on the left-hand side so I can just see. Go like this. Yeah. Seems to be too good to be true. Oh, the rally seems too good to be true. I mean, one of those things, too good to be true until proven otherwise, right? So the question is, and this happens with traders. I get these questions all the time. Somebody's probably asked today and I missed it. Take a look at what you have and what you want to do. And start preparing for what you're going to do now. So you say, if the markets fall, do I want to hold everything that I have? If not, start making adjustments, right? If the markets go higher, is there anything I want to add to, take profits on, whatever? So make those decisions now. Market's going to go up, down, or sideways. If what you have is good, don't touch it. If the markets go up and you want to sell something, get ready to do that. If the markets go down, or you're playing this in your head, Markets go down and you want to sell or buy something, get ready for that now. Don't wait until something happens and then go, well, now what do I do? Oh my gosh, right? Play defense, or play offense, I mean. Yeah. Dustin has puppies. I don't have any puppies. No, I watch the puppies on the, what is it, Pluto TV? I like that channel, or the service. Yep. Would REITs be beaten down anytime soon? That's a random guess. I have no idea. REITs have been beaten down in the short term. I mean, they've fallen a little bit. I use the XLRE to take a look, but what does beaten down mean? Like, do you want to, like, let's see, the XLRE in the last 14 days has fallen 8%. Is that beaten down? I don't know what, I'm not sure what to say there. Do you think tech is the safest sector? I'm not allowed to tell you that. However, I would say that I think most people would think tech is not the safest sector. So I would say in any number of ways that you can define safe, tech would not be at the top of the list. No. Yeah. Maybe the most fun, maybe the most exciting. Now especially, yeah. I answered the question about extending the Guess the Dow to Saturday evening. No, that's a programming thing. We've programmed it in there to automatically cut off at 12. Just guess earlier, guess the day before, guess now. Go take your guess now so you don't have to worry about the deadline there. Yeah. Oh, yeah. You like, I know, it helps your Viacom. Lord knows they play enough commercials now. I don't know if they figured me out, but I see a lot of extra commercials than I used to, but good for them. All right, I'll wrap it up there. We've done a great job today. It actually worked. Everything's fine. We were cutting everything out, and everything seems to be going smooth. I appreciate you guys watching. I will wish you a great rest of your day, and yeah, talk to you soon.